We'll just start with a brief introduction on each of you guys, just a bit about what you're up to at the moment and a bit about your background and what projects you've got on right now.
Yeah, good afternoon, everyone. My name's Sam Gardner, the Commercial Director at Gardner Vaughan Group. We're a multi-storey residential builder-developer in Southeast Queensland. We've grown quite a little bit in the last few years. Our construction operation, that is, sitting comfortably at about $100 million of turnover per year. And our delivery and our sales rates are targeting about 200 apartment homes per year. So we've solidified our position in the Southeast Queensland landscape. We've got a focus on the sunny coast, Moreton Bay region and Brisbane. And I guess what we're here to talk about today in that development ring, we control everything from site acquisition all the way through to delivery, handover, property management and beyond.
Thanks. Daniel Faigen, Director of Faigen. We are a Melbourne-based developer who've done 3 projects on the Gold Coast. 2 completed, 1 finishing in a few months, all with Hutchinson Builders. We've acquired another site in Broadbeach, or another sort of 30-odd stories, launching towards the end of the year, and doing a few more things in Melbourne as well.
Thanks. Michael Nitschke. I'm the State Director for MaxCap for Queensland.
Awesome. So we'll kick off just about kind of what you guys are seeing across your projects and also what the kind of MaxCap house view is as well, just around the consumer. How do you see that the consumer market kind of playing out this year? We saw a little bit of data there, but curious what you've got a project coming up. What's your thoughts?
Yeah, look, obviously the last few years, we'll say, since COVID, Southeast Queensland's obviously been the darling of Australia. The buyers have had a great experience, they've had capital growth, which doesn't always happen in every state with the apartment market. The challenge has been around construction. That continues to be a big challenge today. So I think as long as you're providing the consumer with confidence that you can deliver, and part of that's about starting jobs, starting construction, then the demand's still there. I think they're just looking for some certainty that the project's going to start and the project's going to finish. And it's really about giving them that confidence. I think from a price perspective, things are expensive and they're going to stay expensive. I mean, these cost increases are really as a result of cost more than demand, I'd say. And so really it's about, if I'm going to spend, you sort of made the joke about 3-bedroom apartment, but now you're asking people to pay $800,000 for a 1-bedroom, maybe facing the Gold Coast Highway. It's a lot of money, for what used to be, probably 50% less than that, only a few years ago. So I think location's key. Amenity, place like Palm Beach, you're close to the sand. Places like Broadbeach, retail, hospitality, the other amenity. I think that's becoming really important. You're asking people to spend a lot of money on a significant asset, and I think now, a lot of people that may have bought from Melbourne, may have bought from Sydney, they may have already acquired. So whilst I think the demand's still there, I think that it's not going to be what it was the last few years, and it's going to just take the developer to give that market real confidence that they're buying a quality product, that it will get built by a quality builder, and it will happen in a timely fashion.
Our predominant buyer base are investors for the sort of smaller properties, the 1 and 2 bedroom apartments, and downsizers for the larger properties. We play in the area of the suburbs, metropolitan rings, where downsizers don't really want to leave. They want to stay in that area and they're willing to pay for it. As far as market demand and consumer sentiment goes, it's just as strong as it has been. We haven't done a lot of work in the southern states. We do have buyers come up every now and then, but it's not by marketing it necessarily down there. So it's remaining strong, and forgive me if there's any real estate agents in the room, but we have to muzzle our real estate agents to stop selling too quickly in some respects. A maximum of 2 sales per month is the aim of the game. We don't want to sell out too quickly and miss that price rise over the construction program.
Consistent view. We're really confident in consumer sentiment and in terms of the projects that we're seeing. They are supported by that. The population growth that we're seeing, that continues to outperform from a national perspective. Inquiry, that's it's pretty phenomenal to see how many people are looking to buy apartments, how many are inquiring, and obviously it starts with an inquiry, and that's really strong. So, and the projects that we are seeing, and once they're commencing, there is the initial excitement, but it's continuing through once your construction starts, and those sort of milestones that you expect to see that continuing demand, we're seeing it. So from a demand perspective, we still see that as a positive.
Totally. I think, one of the things that we noticed, again, that's different about Sydney in terms of buyer behaviour. On every listing, we show who the team is, behind the project, and we were kind of the first people to enable consumers to kind of view what other projects they've done previously. We actually see higher engagement rates in Queensland for people looking at the Meet the Team section for some obvious reasons that you guys are aware of related to the builder side. So the next question actually relates to that. So you guys each have slightly different, obviously yourself with a different approach, but interested to hear what your perspective is on the role of the builder and how developers can kind of market themselves, I guess, if it's an external case. And then for you, Sam, just a bit about your experience having the kind of internal capability and what that's meant for you guys. Any advice you've got as well on securing a grade A builder or doing it yourself?
I spoke about recently communication and transparency being two key parts in this environment. You need to show consumers, you need to pull back the curtain, show the machine, show them the drivers, and then they'll make a decision whether they trust you or not. It's never been more true. There's so many buildings that aren't progressing and aren't completing. There is hesitation, serious hesitation, committing with any one builder developer, any one developer. The fact that we have building in-house really supports this transparency piece. We can demonstrate to them exactly how everything works. Sometimes it might be to our detriment, but at least they've got all the information they can need to make a purchasing decision. So it is an important factor for us, having that model, but I think it's just as important for anyone in the room, any business. You've got to show people who you are just as much as what you do.
Yeah, we have taken the approach of outsourcing construction. I think for us, we thought we'd rather manage that risk, through a contract. And Hutchinson, I guess, were the right partner for us. We're lucky to get them at the beginning of COVID, and now being our fourth job with them, they're sort of happy to be at the table. Before we acquired Broadbeach, they committed to building it for us, committed to being at the table. We felt like they were a brand that gave people confidence. They were a brand that was still going to be there at the end. But it's been a partnership. This hasn't been, let's lock in a contract and tell Hutchinson every time they come and ask for, a favour, or whether it's money or something else. We've actually always tried and found ways to actually satisfy them. So it's been a give and take relationship. I think that's why they're prepared to build for us again, and we've sort of taken that approach of how do we solve problems together. I think the developer-builder model, when you get to the size that we're doing and you are really sort of call it 26, 30 stories, it's very hard to for us to find a builder that's not Hutchinson, even to return the phone call. I think sub 20 stories on the Gold Coast, there are a lot of builders who are prepared to do that. Once you get above 20 stories, there really is not many people to talk to. So I totally understand why developer builders, form that model. They've got a great site, they're able to get the sales, but they've got no other option but to try and do it themselves. For us, we see ourselves as fortunate that we have the builder, and that's been our preference, the way to go.
Because I remember, call it a couple of years ago, the word was kind of that Hutchinson wasn't going to do anything in Resi. When did you guys secure that, and how did that process work?
Yeah. Look, we got them when they were hungry, so that was the start of the relationship. I think the relationship has been very, very positive. I'm meeting with Scott after this for a coffee. But as I said, it's been a give and take, and I think that they're refusing to bill for people that told them, you've got a contract, satisfy them, we'll charge you LDs. Like, even though they may have been late on some of their jobs, we've never charged them an LD. We've accepted the challenges. I think insolvency of subcontractors is a real issue. You need to sympathise with the builder for that. You can't just take the view that, as I said, you've got a contract, meet it. Like, even with our next job, we're going to share some risk potentially on some major contracts that we might nominate our own formwork company. So we're now getting into the detail of who do we maybe want to use. So we're speaking to subcontractors ourselves. We might nominate those subcontractors because we know Hutchies will take the view there's a whole bunch of things they can control and some things they can't. And how do you share the risk on the stuff they can't?
Makes it like the weather. And so, Michael, with the at max cap, how do you guys think about the role of the builder when you're deciding, the funding terms and whether you're going to fund something at all as it relates to the builder?
Yeah, we go through a similar process. So we have a construction risk team, so that have been, whether it's been quantity surveying or been through that in the industry and assessing that risk. So we go through similar processes. There is different structures, obviously, and that's something that we spend plenty of time on in terms of understanding the interplay between what would have been a developer and third builder and how that works when it is one and the same, essentially. But it is ultimately it's the depth, and in terms of we are looking at more of that, and the majority of the active developers we are in that owner builder at the moment. So there's one that's, like a Sam who's been, the group's been doing it, very successfully for a long period of time, versus new entrants who are taking on that responsibility for the first time. Going through, an established owner builder is, you've got the track record. You can go through and see quickly, the depth of their relationships, which is the key part of it in terms of, what we've seen in the last 2 and 3 years is the shock. How do you actually deal with that? The strength of relationships. How do you deal with those shocks? If that's the first time you're seeing it, that's the sort of thing that we're paying a lot more attention to. So what is the depth, in terms of you going out into market? What is your depth of coverage across all the key trades? What are the relationships with it? Can you actually bring that experience into that? And we're obviously very reliant on people who have been in the market and dealing with those sort of shocks before.
Yeah, makes sense. Last time we were here in Southeast Queensland 6 or 7 months ago, some of you guys might have been here. We had Brooke from Mosaic, and he was talking about they're kind of quite two distinct groups, where it's developers that are adding the kind of builder piece on later. Then there are kind of construction companies that are evolving into developers, like Brent from Sierra, who's here. And the preference on the latter sounds like on the finance side. But again, it can be quite tough, right? If you can't find a builder, you can't find a builder. So obviously, just before the event started today, there was the announcement on the Olympics, which is going to be in Vic Park. Can you just talk to us a bit about how the Olympics kind of played into your thinking, and how does it continue to play into your strategy?
Look, I think the growth of Southern Queensland really had nothing to do with the Olympics. I do think it was around value for lifestyle that people saw sort of during the pandemic. I think the infrastructure play has been challenging in terms of finding labour, although I think that not all builders won that piece of infrastructure they thought, and that's why I think some of them are coming back to the resi market. They sort of thought, we'll stop doing resi, we're going to win a whole bunch of infrastructure jobs and get paid well. I'm not sure it's played out that way for all of them, but it's a problem for the private market. Like, the lack of labour is a real issue, and we're just going to have to deal with that and deal with some of the inefficiencies that brings. And just on that, just a point about your developer builders, it's interesting to see the union's sort of perspective on what the developer builder is and how that plays out over the next few years, because I think they're going to try and show that EBA builders are sort of the way to go. I'm interested to see if they change sort of some of their thinking and some of the efficiency stuff challenges they've created sort of in rise of the developer builder model.
Olympics, yep. I don't think it's really had a huge impact on the stuff that we've done in Southeast Queensland so far. There's been a fundamental shortage of product that's really driven the market. But now that, if we had to, we'd see a lot of the southern buyers, they bring that into the equation when they're purchasing. We don't pick at it too much anymore. It's there, everyone's aware. It's a great thing, but it's not as much of a focal point as it once was.
Would you say overall it's been a negative or a positive from a development point of view?
Positive wise, absolutely, from a buying perspective and a client perspective, and their perception around Southeast Queensland. From a builder's perspective, you might want to look somewhere else during that time. While we've got ample finishing trades that will be available, your structural trades are all going to get absorbed up. So it'll be even tougher for privates and for residential to get off the starting blocks and really finish during that period. And you just got to be cognizant of that. So.
What do you think, Dan? Overall positive or overall negative when you're assessing
Look,
development?
I think it's mainly an overall positive. I think, similar to what was said, I don't think it had a huge impact on the demand. I don't think that was why the demand for Gold Coast or Southern Queensland was created. But I acknowledge that probably closer to the date when they start some more of these jobs, it's just going to be another problem for builders to get labour.
I guess the other side of our business is investors. So in terms of the funding, in terms of where that comes from. So, when you think of Australia, particularly from international investors, Melbourne and Sydney, that's they're always the gateway cities. So having another focus on the Queensland market, it's a positive, from that regard.
So site acquisition, you guys are both all very active, at both the front end. And what's kind of been the trends this year? Do you think more sites are going to come up for sale? Anywhere in particular that you're kind of interested in, or what's your take on kind of buying sites this year?
We've seen it already, significant increase in site availability. I think what's happened during COVID is landlords and vendors have sat thinking that there's this push on sale prices, and so I'll hold off until COVID's sort of forgotten about, and then I'll put it on the market. And I think now's a sweet spot, the thought process being, well, I can't build it. I've had the upswing in the residential values, so let's go and sell it with a DA or whatever. And it's soon enough before the Olympics to think that a purchaser might continue to see that upswing. We've got to be very selective with our sites now because we can only build so much. We might have 24 sites available to us and we need to pick one of them. It's really gone that far. I don't know how long that'll last, but that's where we're at right now. And that's only changed in the last few months for our business.
Are you seeing any particular pockets where there are more sites coming up or less sites?
There is for us it's quite a wide range. I mean, we market quite heavily every region we're in, so then everyone comes out of the woodwork and sort of offers up what's there. You do have to distinguish between A grade and that. So if we talk about A grade sites alone, sure, yeah, really tough. But you get your landlords who have maybe got a DA or not, they've sat on the site for a while, can't build it, they need to sell. Those are the sites you're sort of looking at. You also get your smaller neighbours who all band together and try to sell you a site. They're typically in B grade areas. But no particular pockets. I know there's still a lot to purchase down on the Gold Coast. Sunny Coast is a little tighter, and A-grade sites in Brisbane are getting tough.
Look, there's certainly been definitely I agree there's been more sites. I think we found over the last 4 years vendors were quite unrealistic. Everyone thought that interstate developers, maybe who weren't as experienced, never had the network, just saw the boom of the Gold Coast, thought they would come in and jump in and it'll be easy days. Well, it's not. It's not easy from a construction perspective. So I think now we're seeing vendors who are more realistic. I think that interstate developers, if they can't get a phone call from a builder and they can't get certainty around what the cost is and maybe the amount of equity required is harder to get now from the equity side, and maybe the LVRs aren't as good as they once were and interest rates, you all know, they've been higher. I think there's been a less activity. You seem to see the same names buying on the good sites in the Gold Coast. So I think that the inexperienced developers are no longer in the market. I think there's still a lot of good sites in the Gold Coast. I mean, there's just amenity all over the place there. But we weren't actually intending to go again. Really, we were offered sort of crazy numbers for sites, and then we found something that we thought made sense, and we decided to do it that way.
Cool. Was it crazy numbers as far as what the vendor was asking?
Yeah, like if I go back to pre-COVID, we bought a site, Palm Beach, 17th Avenue, 20 metres from the sand, paid $5 million, got 78 apartments. Within 2 years, that person wanted 15 million. Then there was suddenly prices for similar sites, a bit bigger, but similar locations, they became 30 million. It just started to not make sense. And whilst, yes, we've been able to push the revenues up, the construction price, the revenue has just been a result of cost, right? And costs have just continued to escalate, if you could even get a build price.
And with that in mind, what do you think construction costs are going to do this year?
Look, for the stuff that we're doing, EBA, Hutchies, the developed builders may be able to do it cheaper than us. It's probably GBA, $5,500. It's expensive, right? And it's inefficient and it's slow. It's probably taking 6 to 9 months longer than you think it should have. So all of those things just play into the cost.
In our construction operation, we've seen a 63% increase over the last 4 years, or 1.4% per month consecutively for 48 months. We're sort of not programming that same increase in, but the data that's coming out of master builders and the rest supports that. So it's just making sure you have the right contingencies, super efficient builds, and the contingencies play a big part into that.
Do you think the developer-builder model kind of gives you an edge in terms of value managing some of the construction costs?
It does. However, we are a builder-developer. We're also a designer. So I'd say it's more important that the design's done right at the front end. Once you're under construction, you don't want to redirect that ship. So yes, we in the past have been a lot more fluid. We could change direction quite quickly. But once you're at this scale and you're a commercial builder, you don't want to go near that, variations and impacts to programs and all the rest.
And obviously this has a pretty big impact when you're looking at kind of feasibilities at max cap. What are you guys looking at this year?
From a cost perspective, I guess just in terms of to add the things that we've seen, things that have been let in the last maybe 9 months, sort of mid last year, there's the developments in that regard have been, we're on time, we're on budget. It's something, that hasn't been a consistent message. It was always, that was just the normal, is it on time, on budget, tick. That hasn't been the case for 2 or 3 years. We have started to see that, which is, hopefully reflective of a little bit more stability, but obviously noting that there still is some pressure. There's certainly some pressures within the market. But ultimately it is a case, so I guess covering off on a few things, that the land component, we absolutely are seeing similar names in terms of capacity and seeing this as an opportunity to look at sites where there's not a lot of delivery capacity in there, but whether it is the owner builder that has capacity or has a good relationship with a builder that has the ability to deliver, we're actually seeing those developers looking at sites and seeing this as a really good opportunity to secure a pipeline for the next 3-5 years, however long this lasts.
Do you think that's going to result in a bit of consolidation in the market where not everyone is kind of getting a phone call back from Hutchies and not everyone has the kind of like track record of the building stuff? It feels like if that continues and you fast forward into the future, perhaps there are fewer developers but bigger developers?
We look at it as cyclical, not as a permanent shift. Obviously, but in terms of that's what we're looking at in terms of, so everyone who's maybe converted across to being from pure developer to in-house capability, I don't look at all of them and saying that's a forever move. It is the current market. It is, there isn't the capacity to deliver from the third-party market that that there is demand to support. So I don't necessarily see that as a permanent shift across.
Yeah, cool. And final question was just, how do you kind of, I guess more of an overview, advice to developers and project marketers and the like in the room, what's your advice to them in 2025 and what's your general kind of vibe check on the market this year?
I don't think I should be advising project marketers is probably where I would sit, but in terms of, I think where productivity is a big capacity constraint. So that's obviously one of the key things that we're looking at, and in terms of Olympics as a topic, in terms of where that capacity might be. So our focus is absolutely around who you're dealing with, in terms of their ability and their experience in delivering previously, from a certainty that you are going to get product delivered, in a certain period of time, reduces the shock in terms of the cost that we've had in the previous years as well. So it's absolutely knowing the name, as Sam mentioned, do your research, make sure you've got that capacity and you're comfortable in that being delivered.
Buddy up. It's all about partnerships. If you don't know the answer, someone else will. Our focus is absolutely on A-grade sites and efficient design. Don't try to make these things too complex. Don't push the GRs to the sky. Be reasonable. We're in a period of time where we need to deliver a lot of product. That's where the focus should be.
Yeah, I think it's all about cost, right? So our strategy, I think one of the reasons why it's worked for us is we haven't launched sales until we've had a fixed bill price. So yes, we've been prepared to commence construction, but the old days of coming and selling, coming back, getting a bill price, we know that sort of destroyed a lot of feasibility. So I think you've got to work with your marketer, work with your builder or your in-house capability, and launch when you actually know your bill price. I'm not going to give advice to the sales guys, but I think opening up the sales channels has worked well for us, using groups as well as retail. As you see from the searches, a lot of people are searching for property in Queensland. So, speak to the other sales groups in Sydney and Melbourne interstate, and obviously that wholesale sort of sales channel has been very strong as well as retail. So we've sort of like to sort of spread it that way. But I think all about cost and not going too quickly and making sure you factor in some of the inefficiency. So make sure there is that contingency and that headroom from a finance perspective. You might not get the equity you want. The builder, there might be an issue with the builder, there might be an insolvency issue, there might be a timing issue. So headroom is going to be key.
Thanks very much, gents. I think we've got entrees up. Hope everyone enjoys, and round of applause for these gents. Cheers for sharing the insight. Cheers, mate. Good job.